What's up, traders? Matt from the Trade Brigade here with your broad market analysis for the day. We'll cover SPY, the Qs, and IWM. On the left-hand side, as always, we've got the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block is our SPY for the S&P 500. What can we learn about the daily time frame chart here? Certainly, today's candle is a hammer candle, long lower wick, close up at the highs of today's session, bullish in terms of structure, but more importantly, let's think about the gap that really did not fill all the way. Quite frankly, we just have a partial gap fill here, which is an extremely bullish implication. We know that on a gap, there's virtually no structure that exists until the prior day's high. We look for gaps to fill as we start moving through them, and the sellers were not strong enough to close that gap all the way to yesterday's high. This is especially noteworthy now that we've been extended for a number of days, but more importantly, through the double top resistance here on our daily time frame chart. And again, the fact that we were able to close up at the highs of today's session, everything about this is extremely bullish. The bulls remain in control. This was just a little bit of correction to the overnight inventory, and then it was back off to the races after a clear double bottom here on the 30-minute time frame. So bulls remain in control. I will, however, remind you that I don't think it's favorable in terms of trade location here for new longs. Not only has the market been up significantly with no pullback, we're now extending. Think about a rubber band, right? Stretching. Eventually, it's got to hit a breaking point, right? And that's where you get those nasty snapbacks. And the fact that we've now extended through a very critical and obvious area of resistance, I think the pullback snapback is going to catch a lot of people off guard. You might start to get feelings as well. So this is more of the psychological aspect that you should at least seriously consider. You might start to have feelings where it's like, okay, I thought the pullback was coming here. It never happened. I thought as we approached here, the pullback was going to come and it never happened. Like, what the heck? I'm just going to go all in long at these highs. That is not the proper way to be thinking about this chart currently. That is essentially what's going to trap a lot of people up at these highs. And when the pullback does come, it's going to be exacerbated by all of the people who had that mentality, bought up here at the highs, and then starts to fold as the market pulls back. That's going to lead to aggressive pullback, okay? So don't get caught up into that trap. Even though it seems like this is going to be a nonstop move all the way back up to all-time highs, I would not jump in on impulse and just assume that the market has to travel higher. We're getting dangerously overextended in my estimation, and the pullback risk far outweighs the possibility for something like this. I know I keep saying it, and the market can always do whatever it wants to do, but we have to play within the risk parameters of our trade plans. I mean, think about this. If you were to go long here, where's your stop loss going to go, and where's your sort of target? Obviously, the target's going to come here from the first major lower high in the S&P 500, but where's your stop loss? Is it underneath today's low? Well, what if it starts filling the gap? So is it underneath that? All of a sudden, you've now cut your risk reward from, something maybe a little bit more favorable, closer to a 2-to-1 to like a 1-to-1. Okay, what if you want to put it underneath this last breakout point around 450.31? So is your stop going to go over here? You're long from up here targeting this? It just doesn't make sense as we start getting to these levels. So please keep that in mind as you may start to encounter feelings of fear of missing out, right? Don't get sucked into this at these highs. In terms of pullback levels, if a pullback is going to develop, obviously it has to happen by closing this gap. First of all, that level is going to be breaking back down underneath the double top high around 457.50, closing the gap to yesterday's high, Monday's high, 455.85, and then it's all about 450.31, and our line in the sand is now going to be bumped up to 446. Why is that the number? Well, obviously, as this continues to extend higher, it means the range is larger, and our Fibonacci's are going to be moving higher as well. You'll notice that 446 is roughly just above our 38.2, and that's a structural element as well from our 30-minute time frame. You can remember resistance, support, resistance as we stayed below, and the breakout leads to a significant new higher high. So 446, 38.2 is roughly the new line in the sand to the downside. I really don't want to see pullbacks underneath that. Sure, could it go a little bit deeper? 441, 50% retracement? Yeah, but at this point in time, because of all the bullish implications that we're seeing so far on this chart, I really don't want it back underneath that 38.2. So we'll see over the course of time, but those are the levels, those are the numbers that I would start paying attention to. Volume is actually starting to increase as, instead of in here as it was slightly tapering off that we were observing last week, it's actually starting to pick back up. We saw stronger volume on today's session higher as opposed to Monday's session higher. So that's what we've got in the SPY. We sort of covered our 30-minute time frame. Of course, here's your double bottom. So for you short-term traders, here's something to at least consider. Any retests of the neckline now want to hold roughly around 459.80. Okay, so if we do get a pullback, like this is for short-term scalpers, right? This would be a level of interest. The double bottom neckline neckline from this 30-minute pattern. You would want to see that hold. Obviously, that would produce your next higher low, and you can continue the uptrend from there. If that fails, maybe that's your advanced heads up to say, hey, we're probably gunning for that gap fill. That's our SPY in a nutshell. Let's move along and talk about the QQQ for our Nasdaq 100. What do we have on the chart here? You can see my alert for the gap fill. Never triggered, never filled the gap all the way. A lot of the same sentiment here will apply to our QQQ. We're extending above that double top from right around in here. You'll notice, again, we do have a hammer candle closing up at the highs of today's session. We've recaptured the daily 200 SMA. We had a partial gap fill. All of the same sentiments apply that we were just discussing in our SPY. Let's go ahead and remove some of these non-important drawings. We're also going to extend that to the right, so our trend line is still intact. Again, notice the small volume increase that we saw in today's session. That's a good thing for this move continuing higher. Again, risk-reward echoes the same. Where are you going to place your stop loss? Is it under here? Is it under here? Is it under the support trend line? I could see that being a little bit more reasonable, to be quite honest with you, in our QQQ, noting that we had a couple of days of tagging up, if you will, moving back down closer to the prior day's low, unlike the S&P 500. So I could say, if you get sideways or maybe a little bit of pullback into the support trend line, maybe that's a buying opportunity. Stop goes below the support trend line, then you're looking for follow through to the resistance trend line. That could be a little bit more reasonable here in our QQQ, but still be mindful that this is fairly extended. We haven't seen any significant consolidation, and the pullback risk is still high at this point in time. So keep that in mind here. Levels to the downside haven't changed much. Clearly, the gap fill is going to be at 365 for round number's sake. Underneath that, we have the breakout point from here on the 30-minute time frame. It's best to just look at these levels here, actually. You can see that one right in here, 357.50s. Underneath that prior resistance, then flip to support for a perfect break and retest at 352. We'll quickly take out the Fibonacci's from the low all the way on up to the high, and now you'll notice your 38.2 is your 352 level. That's exactly what we want to see hold on the worst case scenario pullback that we could potentially get. It would also be a break of our daily support trend line. Anything underneath that is certainly not looking attractive at this point in time. We can start cleaning up some of this structure. I don't want to remove all of it and just sort of, leave those levels in the past. I want to be mindful of where they're kind of at. I wanted to remove that, and then we can get rid of this one here. So that's going to kind of do it on the QQQ. Again, pullback risk is high. You have the downside levels to be paying attention to. To the upside, there's really not a whole lot of structure until we start getting into that next resistance point closer to 390, 389. Also, the daily resistance trend line could be coming in early. And just as a reminder of where that's coming from, if I scrunch up our chart, remember that the all-time high was here in the QQQs, and then we had made a lower high consecutively instead of like the SPY, where this was essentially the time frame of the all-time high, and then from there it was the sell-off, right? So that's a quick update in the QQQs. Things do look bullish, but again, short-term scalps, fine to the upside, but I wouldn't overstay your welcome with something like a week-long swing trade, looking for more upside here. Just like in the SPY, there's your double bottom. Neckline is technically at 369. I would use that level, note it's important from the daily here and here. It's also the rough daily 200 SMA as well. So that's the QQQ in a nutshell. Looks bullish, but again, be mindful of your risk at this point in time. Next up, we have IWM. The biggest thing we can read into today is the IWM, a huge risk on signal for equities in my estimation, recapturing that 208 gap and go, unlike the pullback that we saw in many of our, I say many, but it's really just the SPY and the QQQ. Those both had pullbacks, right, to give us partial gap fills. Yeah, well, in the IWM, you can see it was off to the races, little pullback, and then off to the races into the close. Very strong activity here in the IWM, taking us directly into that 212 pivot, breaking out of the daily bull flag from right around in here. Fantastic move in the IWM. So we can start to clean up the chart just a little bit. We'll talk about levels to watch now. Obviously, we do not want to see it back down underneath 208, but if it does, it needs to hold the gap fill and then reverse out of that to continue to produce higher lows, something that would look like that. So underneath 208, watch for the gap to fill. That's Monday's high around 206 quarter. And then we would want to see a reversal from that level. If it's a failure back down and then we get acceptance underneath that gap fill, that does not look too promising to me. Sure, over the course of time, maybe we do something like this and it works its way higher on the daily, but in the short term, I do want to see it above, at minimum, that 206.27, right? If there's a pullback, something that looks like this strikes me as much more healthy and continuing that risk on type of environment here in small caps. And again, just to illustrate this, I know I probably sound like a broken record. I've been using that term a lot recently on the channel, but it is what it is, right? All of the lows from in here that were acting as support, then resistance on our double bottom on the weekly has finally broken, okay? So that's really the significance of 208. Big important day here on IWM, recapturing that back to the upside. You can clearly see that you could also subdivide this with the 212 bottom end, right? You get all of these supports, support in here as well, resistance on that big red bar that obviously broke it down. So you could start to look at 212 as just as significant of an area, but I would say 208 was the first major one based on this that we really needed to recapture. So good move today in IWM. Looks solid on the 30-minute time frame as well. Again, we pointed out that beautiful flagging activity here. No gap fill whatsoever. It was just immediately off to the races. If we come in with the fibs, notice how it holds the 50% retracement of that first initial up move. Will come in from the lows all the way up to the highs. And would you look at that? This is, guys, you literally can't make this stuff up. 38.2 is the highs and the 61.8 is the lows. So on smaller time frames, like your 15-minute, your 5-minute, if you're a scalper in small caps, these are the levels you want to see hold in like a picture perfect world. So if we do get pullback tomorrow, the first ideal level would be 210.50. If that does happen to break, you want to see that hold up from the afternoon pullback. Lunchtime pullback, really, low around 209.50. Okay, so those are the two levels for short-term traders looking for scalps off of that, something that does this. A little bit more aggressive, like if we put in a lower high from here to here, maybe that breaks down, and your next foothold could potentially be that 209.53. Do mind, though, that if this kind of happens like this, that does have the opportunity or possibility rather for head and shoulders pattern, right? You can clearly see head, shoulder 2, neckline break. Maybe that's a move back down to that, but that's very, very speculative. I wouldn't think about that as a primary objective. Just noting the big relative strength we've seen here in IWM into the close, strong up at the highs of the day's session, respectable pullback. Everything about the activity in IWM and small caps was bullish on today's session. So that's our broad market roundup. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.